Stock indices rose sharply last week while gold prices slid, and as the new week is starting, crypto prices are down quite sharply. What's next for the markets this week? My name is Alejandro Zambrano and welcome to the weekly market update here at Thinkmarkets.com. Before we start, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. As well, I will share my point of view on the market, but this is market commentary and made with an educational purpose. Okay, so what's going on here then? As I said in the beginning, stock market's up. So indices up sharply, the Nasdaq 100 up where sort of 6.5%. And if you look at the Nasdaq 100, we are 3% away from the old all-time high. One would not really have expected this just a couple of weeks ago, but yes, we're moving very close towards the all-time high. At the same time, gold prices have dropped. Worst week since November. So these were the headlines from last week. And the reason for this is because of the US reducing tariffs on Chinese goods from 145% to 30%. And what's interesting now is that they might come down even a bit more. We have the US government not liking how China is allegedly part of the fentanyl drug production that is happening in places like Canada and Mexico, allegedly, and this is then being pushed into the US, and some of the raw ingredients are coming from places like China, and there could be potentially be some sort of deal in the making there, which could potentially lower tariffs even more. And this is also needed because, as we have looked at many times here at this weekly market update, activity at the US ports were down about 30% from last year. In other words, fewer goods being imported. And also the latest now is that you have Walmart hiking prices most likely over the next couple of weeks. And if Walmart is doing it, then everybody else can also do it. And that is something that the US government would like to avoid. In fact, Trump has already said that he would like to see Walmart eat the tariffs. In other words, absorb the cost. And economists are now saying that, yes, inflation, while it's at 2.3% right now, it might go up towards 3.3%. And this is also exactly the reason why the Fed does not want to cut interest rates right now. And that's one of the reasons why gold prices started to slide to the downside. The other bit, of course, with gold prices sliding to the downside is the fact that because of the slashing of tariffs, the probability of recession in the US has dropped roughly by half. This is a chart by Danske Bank, and before they cut these tariffs, the average trade-weighted tariff was at 25.8. That's way above the levels we saw during the Great Depression. And when rates were around here, world trade dropped with roughly 65%. Stock market indices added another 80% loss when the tariffs were at these levels. And we were way above them. Now, after these concessions for China, we're still at levels we saw around 1940 and still a bit too high. But hopefully, we will have even lower tariffs going forward, and that's the hopes now for markets. The challenge, of course, as well, what's going to happen with the EU, and right now there's not too much information to say about that. But yeah, this is a very good step in the right direction, and that's why stock indices are up, and that's also why gold prices are down. Other data we had last week was US inflation. So it dropped slightly from 2.4% to 2.3%, which is obviously good. The question is what's going to happen next. That's really what's driving the markets. As it stands right now, the markets are giving it 60% probability that we'll have a rate cut at the July meeting. So not the June meeting, but the one after that. That can, of course, boost gold a little bit, can definitely boost stock indices a bit. But for now, most of the focus is on tariffs. We also know that retail sales remain strong. So this is the annual change. So we can see here that we haven't seen any change here. Like the amount of retail sales remains at a healthy growth pace despite these tariffs. And that is why stock markets are so up, because we're in a situation where we went from anticipating a really bad outcome with tariffs extremely high and a recession on a worldwide level to now, and the risk of that happening dropping quite sharply. With that in mind, If we look forward to Thursday, on Thursday we have the flash PMIs from the Eurozone, the UK and the US, and there are surveys, and they will give us an indication of what's happening in the economy now in May. We need to take them with a bit of a grain of salt because they are surveys. We have seen other surveys like consumer sentiment that are at levels lower than we were under COVID and the 2008 recession, but we still, again, haven't really seen any major impact on the economy. The only big difference we have seen is the ports, where the activity is just not there as it used to be before. There's other bits and pieces of data coming out as well. The RBA is anticipated to cut rates by 25 basis points to 3.85. We also have data from Canada, and we have inflation from the UK, where you can see it's quite a big jump here. Markets anticipates inflation to rise from 2.6% for 3.3%, and this has to do with contributions to national insurance. So it's a political move where everybody now has to pay a bit more tax in the UK, and that's anticipated to lift inflation. Now this, of course, derails the possibility of potentially having a rate cut by the Bank of England if these numbers come out like this. Now, what the bank is probably going to do is kind of wait at least for another month to see how things are moving, to get a better and clearer view here, because what could happen here is that if this inflation starts to lead to people asking for salary increases, then that can have a second order impact here. And that's really important. And that's why as well I suspect we are seeing a bit of outperformance where the pound is holding up slightly better than the euro. In other news as well is that oil prices fell quite sharply. This is after Trump raised the hopes of a US-Iran nuclear deal. Why does it matter? Because Iran might add 0.8 million barrels per day in production. So this is more oil to the market. This is quite a big step. OPEC Plus have slowly been adding more supply. So if Iran would decide to just take full advantage of any sanctions lifted, then oil prices can move to the downside. As well, as you're probably aware from your local news, Russia and Ukraine are moving closer towards a peace deal. And in the case of Russia, if they would be allowed to export as much oil as they wanted without any sanctions, they could add roughly up to 2 million barrels per day on top of current production, which would mean that oil prices would realistically maybe drop with at least 10% or so. So things are not looking too good from a fundamental point of view for oil prices. Technically, this is what we're looking at today. So this is the Nasdaq 100. So this is a snapshot from Friday. So we're way above the 200 moving average. And as long as the PMIs this Thursday don't come out extremely weak, then I think people will be looking to buy between 2.9 and 2.5, I would say. They will look to buy at this little dip. If the PMIs come in rather weak, we might have a retest of the 200 moving average around 20,400. But I would say as long as we're above 20,000, I think any dips here are probably going to be bought. When we are above the 200 moving average, usually the price will respect this and will bounce off it and push to the upside. This is Bitcoin prices. So Bitcoin prices had a very nice strong push to the upside here, pushing up before stock indices and then really just pushing upwards. The markets last week didn't really react to the markets the way as stock indices have made, but that's mostly because things moved ahead in the weekend and things have been quite aggressively bullish here. And this chart now is a little bit outdated. I just did it a couple of hours ago, but the price is now going down and around 99.4 all the way down to 92.8. That is where the short-term levels are bullish. You even have the 200 moving average here, although the 200 moving average doesn't matter too much for Bitcoin. Overall, I think people are going to be buying dips, and in worst case down here. And the alternative, which is my preference, is just wait for a break to 107. Here's EURUSD. So last week we said we're trading down here, and we said if we go up, people are going to sell. It might go down a little bit. The problem here, though, is that the market is short-term bearish, long-term bullish. For now, as long as we're below 112.96, I think we go lower. While that break above here can lift us, and I think that's really what we're waiting for. I wouldn't really try to engage on the short side. And then you have gold prices. So we're stuck in this big wedge. We slid below it, we pushed above it, which is obviously not great. We're seeing really people buying these dips because this is your 200 moving average. The overall trend is bullish, and I would preferably wait for a break to 3,270. Break here would align, at least end this very short-term downtrend and align it with the big picture. But as long as you're below this level, we can go up and then probably a bit lower. In the case of Brent crude oil prices, we know from the fundamentals things are not looking too great. We said last week that people are probably going to sell here. So far looking good, and I think if we go up against this trend line here, I think people are going to sell again, and I think we're going to be closer to $60 a barrel over the next 2 weeks or so. And that's it. That's this week's weekly market update. If you have any questions, drop them in the chat below.